Hello traders, this is Rich Derrick from Tradesight. This is the evening market preview for Wednesday, February 13th, 2013. The session that we posted today on Tuesday was one that was really mixed. Mixed in that the overall performance was bifurcated. We had some strength in the S&P, especially concentrated in a couple of sectors, and we had some weakness in the NDX, the NASDAQ. We had the ES futures up on the day by about 3 handles, but while that was higher, the NQs were lower by about 10 handles. So we still have this relative underperformance of the NQs, which has really been persistent for all of 2013 so far. A couple of the features that I wanted to mention that we'll talk about more in detail later was that the advanced declines were positive on both sides, but for pushing out to new highs, they were not particularly impressive. On the New York side, only plus 881 net advances. The other feature is the Japanese yen really is starting to flip around at these higher levels and starting to get more volatile. And volatility coming at range high after a prolonged move is often symptomatic of potential reversal. So we're going to have to keep an eye on that, and we'll take a look at the levels a little bit later in the currencies. All right, folks, and here's a look at the ES futures. Pushed up to modest new highs. We printed a new high on the move, and also a new high close on the move. We are in the overbought territory on the Gann box, above this 1515 area. So now we're starting to get into that area of concern, where you get up into that plus 2/8 level, where you get significantly overbought. Right now we're just modestly overbought. The averages are still above all the major moving averages here as far as price goes, so that's positive. There's not a whole lot of distance between the settlement and the 10 EMA, so short term it's not particularly overbought. But we've had a pretty directional trend here so far this year in 2013 without any kind of a correction. Here's the NQ futures. NQ futures are still fully. This is just brutal. Here's the previous range, basically defined by the opening bar of the year that we've been in for better part of 2 months. Now we popped up above out of that range. And now we've been inside the breakaway candle for now 2 sessions. So this really lacks punch and authority with any kind of a move here. So the NDX is in the NQ futures are definitely lagging. We'll look at some of the key internals in just a little bit here. So focal point is definitely the broad market with money rotating into dividend paying stocks and whatnot, and with the relatively weak performance of Apple, the NQs have been suffering. All right, here's the relative comparison chart, the ratio chart of the NDX versus the SPX, and obviously it took a pretty good hit today. Basically just curling back down to range low on this move. The bias is still down. We did have this little potential turn up here, but that was rejected with the weakness in Apple today and in the semiconductors. So this remains as it has been so far this year, which is relatively weak. We opened on the high point this year and really have been weak all year with a relative sentiment. So long focus should still be in the S&P sectors until this really gets some giddy up and changes. Here's the SOX versus the NDX, which the SOX continue to improve on a relative basis versus the NDX, getting a little bit closer towards that key area where we had this breakdown. So we're definitely going to be monitoring this as we go forward here. This is definitely one of the things that we want to make sure that it remains healthy. This can ultimately turn the sentiment in the NDX and get a better performance, but we've got to see this continue. If this starts to roll back down, the NDX is basically doomed. Just zoom down here to the daily chart from the weekly chart just to show the relative performance that we've had so far. It's been pretty good. Here's your 2013 demarcation line. We've really had an upward bias in relative strength in the semiconductors, but they are starting to get a bit extended, and we'll look at that chart in just a little bit. Here's our 10-day trend, which is still relatively neutral, really just pinned right between the two exaggerated overbought and oversold thresholds, and really nothing loaded into the market here to give us a reversal. Here's the put-call ratio. The put-call ratio did take a hit to the downside, but it did not get low enough to record a climactic reading that would imply that we're going to have a reversal to the downside yet. But we're going to monitor this tomorrow, see if we can come up with another lower reading, see if that takes a further hit here to maybe give us some kind of a signal that we may reverse. These are very, very timely signals. It's not like the trend that may take a little while to manifest itself. It's not like the advanced decline line. This is something that usually will happen within 48 to 72 hours in the market and have a lot of kick to it. All right, now here's a new chart that I wanted to put in front of everyone. This is the cumulative advanced decline lines. On the top, we've got the New York Stock Exchange. On the bottom, we've got the Nasdaq advanced decline line. They're both still positive, not showing any signs of a divergence yet. What we're likely to see is some kind of a divergence here if we start to want to roll over here. So we're definitely going to be keeping an eye on these, and going to be tracking these really closely. So right now we're still okay as far as not having any kind of divergence. But if we're actually going to be coming up into any kind of a meaningful top, we're likely going to see a divergence here where the advanced decline line starts to roll over, even as the market's hitting new highs. The oil futures continue to outperform the underlying stocks. Here's the OSX represented by the red line. The oil futures today again outperformed the oil stocks, so this is definitely a cause for concern for the broad market, and more specifically for oil futures. Oil futures will not really have an easy time making new highs and sustaining them unless they have strong underpinnings from the commodity stocks themselves. So definitely treat the long oil trade here as rental only, and not a long-term investment at this moment. Here's the HGX, the housing index. That was definitely the top performer on the day. It was up more than 3%, really just covering a lot of ground here. Still has not gotten up to hit that 8/8 level or completed this seeker countdown. We're only on bar 7 of 13 required for a sell signal. We had completed one back here in November, and we did have this downturn and this reaction to the downside, which did qualify and set up 9 bars to the downside. But since then, we've not been able to complete this little bit of a countdown that is in progress. Keep an eye on this. If we do count down and complete the countdown up to bar 13, right into that 200 area at 8/8, it'll be kind of a double header. It'll be the seeker signaling an exhaustion warning and also hitting that key 8/8 level in the Murray math box. So that's going to have a lot of bite to it if and when we do trade that. The BKX was also very strong today. Was able to pivot and clear this range by a fair amount. We're now 8 days up in the seeker setup countdown. So keep an eye on 8 or 9, stopping this at least in the near term. 56.25 is the 8/8 level on the GAN box. You can trade along until we get there, unless we get to bar 9 first. Had a nice long trade today in the FAS that worked for multiple points. That was definitely one of the big winners. This is also probably in conjunction in supporting that housing trade that we just talked about. XAU was actually positive on the day, plus about 1%. Still kind of just hovering and pivoting around the 0/8 level at 150. Really nothing to talk about here until this trade until price can get back above the 10 EMA. As we looked at it earlier, the OSX was weak and diverging and underperforming the crude futures themselves. Price was weak on the day. We do have a MACD cross the downside here. Price is still kind of gaming this 10 EMA. It's still technically okay for now until we get a close and a follow through below, which we haven't had yet. But let's keep an eye on that. Here's the SOX, the semiconductor index. Another new high today. We're getting a little bit deeper into this most recent seeker countdown. We're on bar 8 now. This is going to be bar 8 after it opens tomorrow and prints. Key overhead here at 8/8 at 437.50. The trend is up. We looked at the relative relationship between the SOX and the overall NDX. So the SOX does have relative strength for sure versus the NDX. So continue to look at this area for longs until this trend exhausts itself, or gets up to this 8/8 level for a pause. The BTK was the last lagger today. That was the old top performer in the NDX. Really starting to show signs of struggling here. A little bit tired. I think there's definitely some money rotating out of this and into the SOX, into the little more higher beta names in the NQs. This is definitely something that is a little bit of a cause for concern now, because we've got the BKX, the banking index on the broad market, still performing, but the BTK is now starting to underperform. The BTK and the BKX usually perform in a similar manner, but we're really starting to see some signs of slowdown here. Have it close today about in the area of the 10 EMA, so watch for a close below that and a follow through to the downside on a closing basis. Here are the oil futures, which were fairly strong on the day, as we talked about earlier. The oil futures are still outperforming the underlying stocks, so if and when we get up into new highs and can start printing these more advanced more advanced numbers into the seeker countdown exhaustion, we're going to be looking right into the teeth of 7/8 and 8/8, which is going to be a real problem and probably going to wind up being a short opportunity. So let's keep a close eye on this bar count as this develops. Here comes the gold futures. The gold futures, still a source of funds and lagging. All the major moving averages are basically pointing down. Still a source of funds. Possible higher low here if we can get up and print some higher highs, but that is yet to be confirmed. We'll have to keep an eye on that. Finally, the TLT. I just want to point this out because we're 12 days down in the countdown here for the seeker exhaustion. This is kind of the contra-indicator to the overall market. We're actually getting fairly close in some of the other studies, the Comer on the broad market and whatnot. So keep an eye on the bonds here. If the bonds do record that 13, it's going to be notable and probably one of the pieces to kind of put together a potential top in the market here, at least in the near term. So this is something that we're definitely going to be looking at in the next couple days here to see if we wind up getting this 13 exhaustion. All right, folks, well, that's it for tonight. As always, thanks for listening, and please feel free to leave a comment below. This has been Rich Derrick for Tradesight. Hope to see you again soon.